Bitcoin was flat for most of this year, but now all of a sudden in the last 2 weeks, we hit a massive momentum signal, a real one. That's why today we're sitting down with Professor Sina talking about the market structure of Bitcoin and why it's now looking way better than it has ever before. We're talking about what's next for Bitcoin, like 100K, 300K, 323K, what's going to happen from this moment forward. And we even touch on the allocation strategy he's using, being more strategic versus a DCA. Enjoy. And one very small detail that I want to share with you about this episode that makes me very bullish about this very episode, that we recorded this episode exactly a week ago on Wednesday, right before we had the major breakout. And he saw this before it happened in his momentum data. And once it's proof that this is real momentum, as he's going to show in the video, this potentially might just be the start of a real bull run. And seeing now this last 6 to 7 days made me more bullish on this episode, and why the information in this episode is so important to understand. So enjoy. Let's do an update on how Bitcoin is doing, what you kind of expect. And it's exciting for me also because you just said right before we started that you finally, since a long time, see some positive development in Bitcoin, some momentum building. What are you kind of seeing there?
Yeah, I mean, sort of a couple months ago, I realized Bitcoin is, maybe I should say, actually earlier this year, I realized Bitcoin is now becoming a much more of a momentum asset, just because we had our cycle peak, and it sounded like, it felt like going forward was a bit tougher. It was getting harder and harder to move up the price. And so I thought there's a good chance that we might reverse. So it's better also analyze the momentum to be able to get in front of those changes. So I worked on a momentum model sometime in early 2026, and then we debuted it a few months after that. I think the price was somewhere like 90,000. And so since then, we've been publishing momentum results, and they've been surprisingly accurate in predicting what's going to happen. As you can see, for the majority of the legs down this year, well, it does fantastic on the back test, so I'm not even going to mention the historical. But after it was created, it pretty much before any major draw, it does turn red. And if you see on the top chart, for example, I have price, and then it's colored by the momentum value. So when it's red, it's bearish momentum. And so in every drawdown, it doesn't catch it immediately, but as soon as prices starts dropping below some threshold, for example, first in January or before this turn out the year, at around 100,000, it becomes clearly red. And then after that, we drop massively down to close to low 80s. And then it keeps going as price tries to recover a little bit, and so momentum improves, but then we get another leg down, so momentum flips back again at something like 85. And at every one of these points, we publish our reports, and our readers have been familiar with this. And after that, we dropped down significantly to 63, 62. So just having this model has been extremely helpful for managing our own assets, because we had pretty much 100% allocated. So this was a great safety add-on to be able to manage volatility. Now, after that, I've been just publishing week by week, mentioning, okay, we're still in bearish momentum regime, except we had a small period of Bitcoin wanting to recover. So we did see positive momentum. Some market moved a little bit, but then it also reversed again back to the same bearish regime. And we've been there for months now. I think it's probably 5 or 6 months that we are in this choppy stage. It's crazy that we're stuck in such a tight range. And only in the last week or so, or last 10 days, we are starting to see some change finally happening as well. And part of what's happening is Bitcoin just needs more time to absorb sell pressure. As long as you stay in a range and don't break down further, you're absorbing the sell pressure, and so you're giving yourself time to absorb the prior damage to the market. And so I was really expecting improvement, but this quantifies this momentum index that you see on in the bottom also quantifies momentum. In the middle of that chart, you see that there's a zero line horizontally, and then we are finally kind of peaking above that, meaning looking at recent history, momentum is becoming positive. So this is a fantastic time. I think it's months and months of wait, and we are sort of catching very early what might happen. So let's see if that continues and how far it goes. But momentum has been really our friend so far. And the best thing about this is even if there are fake outs, it might show you positive momentum, but immediately after it's proven that it's a fake out, it reverses back and kind of changes your decision. So this is a sort of a more shorter term guide to market reaction, but we also look a lot at long term models. And so I assume a lot of people are familiar with the power law model. And so it basically goes through the middle of the data. And so it kind of gives us average number. And this should have been at 138 as far as the average, but we are now in a bear market, so substantially below the mean. And we are kind of at some of the farthest places from what the power law would suggest. So big, huge distance. And then so in another model, I try to quantify this distance. And so a couple of things that are important. First off, the magnitude of distance is something I look at. For example, like this gap. Plus, it has to be adjusted by some volatility and the change of nature of the market over time. So once we do all that, we get this volatility adjusted power law index. When it's positive, so when it's high, it basically means we are above the power law line. And when it's negative, that means we are below that potentially oversold position and way below what the average trend line would suggest. Well, being below trend line doesn't necessarily mean you're going to get back up there. Like there's no proof of that. But if you still believe that the long-term trend is intact, it definitely demonstrates oversold position. And so at this point, you can see we are way below here, like sort of, I think that one of the deepest deviations, probably the highest deviation to the downside from the power law model. So if the model keeps holding, this is a like super cheap Bitcoin at this point. So combination of momentum changing and the long-term trend showing cheap momentum is fantastic. But to sort of take this further, we also developed the quantile model, which is an extension of the power law, which moves from a OLS basic regression to a quantile regression. And so that gives me particular bands around the trend. So it captures all different quantiles of the distribution. And it's very funny, I'm always way more skeptical than the average person on Twitter about these things, and they sort of always surprise me. Like you can see if we zoom in a little bit, historically, for example, the purple band has been capturing the bottom, right, over a long number of cycles, and this is a third of points fall here. So a third of all these data points would fall in the frozen zone, as I call it. And so I'm not really looking for these things to be like unbreakable walls. Price might definitely go further down as well, but I'm always surprised when it doesn't. So it seems like we were stuck at this low range. And many other price actions and movements have also been matching these ranges that we've identified. Like, for example, green adds another third of points. And so 1/3 of points will fall in the green region. And this is developed way back. So we are not building this after the fact. Like all these regions are based on the full history. And then when we track the price over time, we see that it sort of respects some of these trend lines. It would be interesting to see what happens, but we are sort of very well stuck creeping around or right at the bottom of the ocean here. Now, if this trend is going to continue, at least we sort of follow somewhere in this channel. Um, this is also a fantastic valuation zone because if Bitcoin keeps growing as it has been in the past, this is some of the lowest valuations you can find compared to the trend. Um, Now, so these are my long-term models, but momentum is really what I follow every single day. And so I gave you a brief introduction to that, but I have a few more charts that we can discuss further. But so far, I'm really excited for what's happening. It was a really depressing period for multiple months, and I was also away for personal reasons. I was really less active on social and so forth. But it seems to be kind of gaining some excitement. There is a ton of other things also to discuss here related to what's happening in the global markets and the capital investment with AI and how is that impacting Bitcoin and some other internal issues that Bitcoin ecosystem is facing. So they all might be explaining the bearish price action. But typically, all of that will turn into a final momentum change. Let's see how where that goes.
Super interesting. Also, seeing that line holding so good is really interesting. Also, to see having like not like a lowest possible point because like as you mentioned it can, of course, it's not a guarantee that it won't go a little bit down, but it all kind of points to me that momentum is building. By the way, that's my gut feeling. I didn't had any data, but it just feels like slowly, you know what? Why my gut feeling is saying that? There is so much negativity out there, and I see so much capitulation out there in the comment section and on Twitter and all of those things that I track on a daily basis just because of the nature of what I do. And I've never seen so much depression in the tool. And usually, when there is this kind of depression happening, there's not a lot more down that you can go because we already are at that kind of the deep ends of the bear market. And I'm not saying this is the bottom. We might go down further. I don't know. But even if we go down a little bit further, this price right here is amazing for the long run. If you buy Bitcoin, and I always I always recommend buying it for 5+ years, this is an amazing entry point. No matter if you buy it at 65, 58, 61, because if Bitcoin goes to some of the prices that we see here on the right side, like 165K, 244K, 323K, or even like $500,000, do you really care if you bought at 60K or 65K or 55K? So for me, it's an amazing entry, amazing time to buy, but it's also the hardest time to buy. That's why I love those data models and seeing the actual, not my gut feeling, but like actual data, because it's hard to build conviction right at those price points where everything is so bearish, where we don't have a lot of mainstream media writing positive things about Bitcoin right now, or even a lot of Bitcoiners are capitulating or not as excited about Bitcoin. Miners are switching to AI, and like we can list 100 different things that are kind of like showing why we are in a deep end of the bear market.
Yeah, I mean, several months ago, I published a report saying I'm expecting a lot of money to leave the whole space. And for someone who's been bullish for near a decade, that's a like really tough thing to admit and say. But I was clearly seeing what was happening in the market. A few things jumped out to me before it became sort of the like common discussion on Twitter. One of them was that um, how can I say, like, there's this major cultural change in Bitcoin. So the original type of people who were interested in, privacy or freedom and efficiency, making money, working globally with minimum disintermediating banks, and making backbone of the economy function better, building a new foundational infrastructure. Those people are in the absolute minority now, and there's a lot more of the stock investor type in this space. So kind of the original ethos, it seems that it's forgotten. I'm not seeing a lot of people that sort of keeping that message alive. There's definitely some of them, but relatively speaking, a lot of focus have moved on to securities on top of Bitcoin. And so that's going to be a problem, because if we don't build the base, and if there's not enough attention and capital going to the foundation, we're going to have an issue. And despite what you might hear from professional influencers, that they might say, well, everything is great with Bitcoin, we still have a lot to build. There is a lot of improvements in user interface. And funny, months after I say this, we find one of the most commonly used and highest regarded hardware wallets as a terrible security problem, leading to more than $100 million of coins stolen. That's only one of the challenges. We also have lots of work to make things more user friendly. There is like several upgrades that have been in the making for, I don't know, 8 years, 10 years, and we can't really reach consensus to implement them. One of them would be, for example, ETV and that kind of covenant type upgrades, which would make self-custody finally usable for the average person. It would, for example, one of the use cases are that you can add a contract to your coin that, hey, put some money in this address, but it can't go anywhere from here except this particular whitelist address that I identify. So even if an attacker finds all of my information, they can't move that coin anywhere other than another account that I hold. So it makes kind of stealing Bitcoin extremely hard, and security very, very easy. But it hasn't happened because we were stuck in internal battles of the people who proposed this had to convince other people, which for whatever reason didn't agree, and it became a bloody war. And then the main developer left pretty much effectively the space, and it was so all these infights and challenges prevents us from making real progress. In the outer world, you see the effect of this because there's not much base layer change or innovation happening. You also don't see many startups or companies. 4 years ago, every day there was another crypto startup, fintech innovation. Really, I don't see any of that. Like there's like quite a bit of small things happening here and there, but its magnitude is like 10 to 1 now. And so that's another problem, which many other people don't see. We need this economy around Bitcoin. So we need an ecosystem that runs on the base layer. And then because it generates value, it will need to store that value in Bitcoin. And that's going to put some upward pressure on price of the asset. But if you don't have that economy, there is not a real like strong justification for price appreciation other than temporary speculation. Um, So add all these. Plus, I was also seeing the depression on social media. After several years, you can you have a good gut feeling about these things. And then AI also added, became an extra problem. So once the excitement is diminishing in one field, and then there is another field that's emerging and promising to be the fourth industrial revolution, all the capital goes there. So that sort of built my view, and we became really bearish for several months. but not super loud on Twitter, mostly for my own readers. Um, and unfortunately, we've been nailing that. And that's one of the reasons I'm using momentum model a lot, because just because of my overall view, I felt like there's a lot of violent price action coming. So it was helpful to take a closer, shorter term um, signal from the market. But like I said, one of the good things that are happening is finally I'm seeing a change after many, many weeks. So we can talk about that as well. But broadly, I want to see a lot of these things that I said reversed. So we are still stuck in this infighting. Now, suddenly we've discovered this other spam problem that is taking up a lot of our energy. And then the attention needs to go back to building fintech innovation, building user friendly applications, coming up with upgrades, as opposed to just sitting there and expecting something to go up. I mean, call me traditional, but I want to see real value creation in the economy based on something to justify investment. But that's where we are. But this damage has been real. However, it ends at some point, right? There's so much sell pressure that can occur, and after, it always happens like this in Bitcoin, that many people leave, but there's like this minimum group, sort of minimum viable number of people that still hold and sort of support the bottom.
Yeah, there's also, I heard that recently, it's been now about a third of Bitcoin that hasn't moved since 5 years or so. So like it kept on rising, I think, for the past 5 years. I don't know if it's an all-time high, but it's since the last 5 years at an all-time high, which is also interesting to see. But I'm curious how this momentum works. At like, what are you looking at to see if there's positive and negative momentum? Because I think you also mentioned that you're looking at it on a daily basis.
Yeah, basically, whenever price moves, I go back and check momentum and see. So momentum confirms that if the move is fake or not. And the way it works is it digests the recent trend in the price, but it also adjusts that based on the amount of standard deviation that we expect from day-to-day basis. So when a move is substantially bigger than what you would expect from a choppy market, it sort of statistically shows that we are on a new trend now, like things are changing. And so that's exactly what we're modeling here. It's not always correct, but it's good enough because Bitcoin has like these 50% crashes sometimes, right? So it really doesn't matter if you catch it after 5% or 6%. You need to basically uh, find a way to protect big investments from. If you have a small investment, maybe it's totally fine for volatility and all, but the larger you invest, you have to be also thinking about a hedging strategy, or like a method that will protect you from large volatility. A lot of people even are happy foregoing some of the potential positive trends by replacing that with massive reduction in your volatility. So more and more, I find myself in that camp because my risk appetite is diminishing a little bit as I get older. But yeah.
You mentioned also that Bitcoin is more and more a momentum asset. What do you mean by that?
Basically, for the reasons I explained, I went on that longer rant about the fundamentals to say that I was thinking perhaps the upside is capped for a while, and this is like several months ago, maybe earlier this year. So thinking that, then I'm like, all right, so now the risk reward balance is a little bit not favorable. So we are either going to be in a choppy market or crashing market. So that's why I started looking at something like momentum, which will give me early signal about, you know, changes in the next week, next month, and so on. Usually I didn't care about this at all. Like I had a much sort of a never uh, worried about price action. But since some of the fundamentals became a little bit problematic this year or even last year, I started to use this to sort of be a little bit more active in tracking the market. Um, yeah, so that's a general idea, but I can go in further depth if you want.
Yeah, I think it's actually like up until about beginning this year, I was just like, I'll just DCA into Bitcoin. And I've done that for, I don't know, 5.5 years at this point now, over 6 years. But it seems to me, if you've done your beginning allocation to Bitcoin and you kind of like build up some stack, at some point it makes way more sense to be more strategic on when to buy and maybe even when to chop some off. I haven't done that. I've never sold Bitcoin, but other than spending it, but like I don't count that as like really like making a financial decision. More of like I'll just use some of my Bitcoin. But I, it makes more and more sense to me to look at how overheated or how cool the market is and make decisions of like, oh wow, we are now at 64K. It's an amazing entry. Or let's say we are in 1 year back at a massive bull market and we are at 250K, 300K, completely overheated, way above where we should be. Maybe I'll just take some, not all of them, but maybe some off the table to have some US dollars, euros, whatever you're using when we're dropping again. I think also Stephen Perrinot was on my podcast often already, but one time he was on, he talked about the perfect allocation, and he talked about a 75 to 25% allocation, where 25% was in cash and 75% in Bitcoin. And it gives you that purchasing power in the bear market to actually buy Bitcoin when it's on dipping, and it makes you a more disciplined person of like DCAing. And he showed how much better it was to have 75% in Bitcoin rather than 100%, because you can chop some off in the top and you can buy way better on the bottom. How do you think about having a strategic buying strategy versus just having a monthly DCA, weekly DCA, as I think many Bitcoiners actually have?
Yeah, I mean, DC is great. I've been promoting that as the only or the number one approach for many, many years. It's fantastic, especially when your asset is very volatile. So it allows you to get rid of all that volatility, and you buy high, you buy low. On overall, you don't care about volatility, and you capture the long term trend. So that's great, especially because there's a lot of bad advice about day trading or short-term trading based on charts and trying to overly be greedy, I guess, and try to trade a lot, which 99% of people that do that lose money. There's a statistical data showing, most people who start to trade with less than, a sizable experience, they lose money. And so DCA is a cure to all of that. Just, if you do your research, if your if your long-term view is intact, DCA is fantastic. But if you're really, really allocated or sometimes over allocated, it's impossible to, it's sort of irrational not to worry about price volatility, because sometimes you just have other expenses and have to have a backup for volatility. And it's more responsible to then, after you are past the stage where I'm not going to do risky, irresponsible things trading, but I'm going to do strategic hedging or strategic allocation, right? Methodical, disciplined approach that can help you be much more successful, especially when you have some extra knowledge that gives you an edge. If you have a view on fundamentals, like I said, if it was 4 years ago, fundamentals were hey, we're just going to directly go up. Doesn't matter. Any kind of volatility doesn't matter. But right now we have some uncertainty in our view because of what AI is doing. So we need that to clear out first. And so and several other things that I mentioned. And so that calls for that means additional risk and volatility. When that comes into the model, you have to be a little bit more active and strategic, especially, like I said, if you've had a lot of conviction that led you to invest a super substantial position. And a lot of good Bitcoiners that have really believed in the asset, they are already over allocated. So you definitely have to do some of that buying or selling at important points to just be able to fund your life, or ensure that you have the funds you need for important things in the next couple of years. And then there is going to be a bigger, like a separate stack that you don't touch over time until you have that still the same fundamental view. So I think I would say like a strategic allocation is better than DCA only if you have a strong view and experience with the asset and something that gives you an edge. At this point, what gives me an edge is, the fact that I've been keenly observing the market and the sentiment and everything for near a decade, plus the models like momentum model that have been performing well. The moment they stop working, well, I guess I will lose that edge. But so far, it's been a fantastic guide. And so that's because I believe I have that edge, even it could be marginal. It's a rational decision to be more strategic. But you also usually don't go wrong by betting on long-term performance of something with strong fundamentals and not doing anything else, because typically people are the biggest risk to their own investment.
With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. Yeah, and I like to see the reality of most people, and I imagine, like, you and me, like at least me, I'm very obsessed with Bitcoin. I study it almost every single day in very different ways. But most people, even listening to that, they probably have some kind of day job. So 30, 25, 40, 50 hours, whatever your occupation is, goes into that. Then you probably have family and kids and friends. Then there's another a few hours per week that goes into that. And then you want to listen to something, you have some Netflix, like whatever. And so you don't have the time, or like you should not have the time to look into your assets every single day and obsess about every single move and look at the momentum and all of those things. And I think especially for them, It's such a good thing to just like have a DCA running on there. I've seen interesting things where they have a weighted DCA based on the 200-week moving average, 100-week moving average, and different things. I found it interesting of like, hey, if I have a range between, I don't know, $200 and $400 or $200 and $800, and the closer I am to some moving average or some metric, or like even the power law, the quantile model, the closer I am to the frozen purple line, the more I allocate. I think it's an interesting strategy. But again, I think most people are best to shut off the emotions completely and just have a DCA plan.
Yeah. Yeah. I mean, most people come into this game listening to other people, and those other people typically don't have much more knowledge than the average. And it's very important to have this skill to kind of curate people who you listen to. Um, And then the majority of the advice you will get on social media for free is worth how much you paid for it. And that's something I've learned after decades, after many years watching markets. You're looking to get free information, well, it's not going to be high quality. And the person who generates it is not going to put in enough time and energy. And frankly, people who do have the right skills to give you the good signal, you really can't find much of their information for free everywhere. So people start listening to, what's thrown out there by people who do, probably know the same amount of information. And some of that is, hey, let's. I did a couple of trades. I outperformed the market, so you can do that. And then I'm gonna make a whole story about that, and because that's the game in social media, like, right. So you have to capture attention, and you don't maximize quality. Unfortunately, the way algorithms work, they don't maximize quality. They maximize attention, and it works very well. Most people get attracted to these, big accounts that act as financial gurus or guide, and they typically guide you in the worst place. So I guess the main thing to learn is don't listen to anybody. Like if you think like you're clicking buy or sell just because somebody else said, that's a good sign to stop. Just stop, right? So reach a conclusion yourself. Absorb the information, reach the conclusion yourself. And so that's again why we love DCA, because if you don't do that, a lot of people kind of will guide you astray uh, into into losing your money. I've seen many cases. We can do another like 3-hour podcast on every big personality that I've seen coming up with a new fantastic options trading course or something that finally lost value. And but they don't go out of the market. They come back next year with another thing. So we don't have this sort of a cleansing mechanism. The bad guys of the last cycle, they still come back because they still have the following and everything. So that's the first thing to keep in mind. But in some cases, like for example, some of the models I have discussed, we have quantitative metrics showing that, well, on the past data, it works well. And since we've published it publicly week after week, pretty much 90% of the time, it's been doing well. And I'm not claiming that it will keep doing that, but um, from an expert perspective, we're going to look at the performance and gauge it and discard it whenever it doesn't work. So I guess we can leave the audience with like a deeper view of what's going on with momentum. Hopefully, if they wanna follow along. So this is, for example, the like super long view of the model. Again, what this does, it's very simple, and that's why it's actually really helpful and good and reliable for me. It's a derivative of the speed of price appreciation. So basically, there is no way it cannot catch a bull market or a bear market. And the big question is, does it catch it early or not? And for example, you've seen a lot of the past bull markets, right sort of when the copy action turns into a rise, it changes color to green, demonstrating strong momentum. And pretty much near that top, not exactly at the top, no one can predict the top, but as soon as we have a important correction after the top, it starts signaling a problem. And then sometimes it temporarily gets positive, which is a mistake, and then it corrects itself quickly after the price goes the other way. And so in many of the past cycles, we catch this major part, and then we have warning signs flashing during the choppy part. So even in the last cycle, in both of the up legs of the bull market, we caught it. For example, uh, green shows the appreciation all the way to the top. Pretty much near that top, we turn yellow and red. And then again, we have a second top, which the model still catches by turning green. And then pretty much after that, we are for a long time vacillating between red, yellow, white, and little periods of green, which quickly get reversed. And so, what this is again, all the past data, it's really easy to outperform on the past data. But more recently, let me see if I have a like good recent. Yeah, maybe this would be. Yeah, this is since COVID, and you see how quickly green becomes yellow, super near the top here, a little bit later here, but still much better than holding and figuring out you're in a bear market when you're in a bear market. Um, and the model was published, I believe, early this year. So pretty much the big portion after the top is covered by public announcements, public data you can verify now. So first off, if you did follow this model, sort of at around 100,000, you would be getting that red signal. So at 120, everyone unfortunately, like I said, going back to my influencer comment, there was people super confidently saying, okay, next stop is 500K, 1 million is next month. So there was some guy who was saying like in a couple months we're at $1 million. Those are actually really, really good um, contrarian indicators. Um, and they keep being wrong year after year, but they come back with the same predictions. It's pretty funny how this happens. But our model would say, okay, momentum has changed. So unfortunately, the beautiful price rise that we've been enjoying would come to an end at around 100K based on what the model says. It turns out to be correct. We go down to something like below 90K. Then we do make a little attempt to recover, which is why the model gets temporarily green. And so you may make a little mistake here, right? So but then it quickly realizes that, oh, it's a fake bounce. So then goes back to I guess an orange and a red color again, and then stays there. When we have another big push up, it catches it pretty early, and then it would get you out of the market before, at a profit basically. And then again, it turned out red and stayed red for many months. If I have yeah, this is basically what it would do. And for many weeks, we have been like tracking this bearish momentum. You see, there are many like little pushes upward, and from this bottom to here. In all of these, when I was looking at the model day after day, I see, okay, this has been a big push up, but momentum has not turned. So it doesn't mean this is going to continue. And pretty much every time we went back down to the same choppy action. But now we get this lovely yellow, lighter color, a little bit green. Right now, I guess we are super near white, which when you quantify momentum, the reason for that is momentum has gone from a negative number all the way to a zero and slightly positive, which means we've given the market enough time to absorb all that negativity. So if you stay in in choppy action for a long time, the prior downward action gets replaced with at least a neutral action. And then that sets the stage for a bid up of the price if new buyers show up. And so we're still seeing some of that. And if this keeps continuing a little bit, getting us out of that range, it will also coincide with momentum going really in the positive region and demonstrating, okay, this is a really strong place to add the risk if you want. And so I also have this other chart that shows the periods we've been bearish. The model has been bearish after the top. And you see, for the majority of time, except for a couple fake outs, the model has been correctly predicting that it's going to be, we're in a bearish regime. Even though in some of the cases we had quite substantial bounces from the bottom, but it still kept myself sane. So anytime this model said bearish regime is there, I just didn't do anything and waited. And that was a really good decision. And so, but it's starting to change. Uh, and maybe I'll give it just a little bit more time to confirm. But finally, these big red ranges are giving way to black region, so which will indicate positive momentum. And so I frequently would publish this on Twitter, but also have my own Substack where I add the narrative and interpretation to it. You can take a look at those as well. A lot of content is just going to be openly available. But basically, how this is this is my guide to the market for now, because I don't see massive capital coming in yet. We have to deal with the capital suck that the AI is doing. Absent that, we're gonna have a lot of volatility, right? So I'm gonna use this guide to understand what's going on in the market.
That's really cool to see that there is a tracking device where you can actually see the momentum building, this built on data and not on my gut feeling, as I usually do. It's really fascinating also to see all the data in Bitcoin in general. I think you guys have done a great work. Giovanni also, I think what did he do now? Bitcoin Science Institute. Maybe I got the name wrong, but it's actually bringing a lot of data and a lot of perspective to Bitcoin that I previously haven't seen in Bitcoin. I think the space is getting a lot more sophisticated in terms of what analyses are there and how we can look at Bitcoin.
Yeah, and one grievance I've had usually, typically, is like I said, a lot of bad charts that are out there, like people just linking lines together and overly interpreting something that happened by chance. And that's something people have to be very careful about. So what you said about like more sophisticated people developing things like Bitcoin Science Institute and things like that, that sort of elevates the whole space to a really professional level, as opposed to inaccurate content being abundant. So that's a great thing.
Yeah. Also, the content regard that you made, I think it's very hard now because there's so much content out there to find real signal in it. You know what? Like there's what was it? Every single day is content uploaded just to YouTube that would take you 83 years to consume. Some crazy statistic like that. So there's like a mass on content out there, and it's hard to find like the good small things that actually benefits your life and doesn't distort your life. But I think we are short on time. I've many more questions, but I think we'll leave it at that today and go into more detail on some other day. We have an end routine, as you know, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. I think you're one of the best guests to get that question. Do you believe we get to $1 million in the next halving epoch? So that would be within the next 6 years from now, if I'm not mistaken.
That's the toughest question. I don't have much of a view at this point. If my concerns, which I said, AI sucking capital, infighting a Bitcoin, lack of upgrades, and lack of a strong ecosystem development. If these four things are not resolved, no. But I'm hopeful. I think that maybe the bad actors or unintelligent actors might have a shelf life. So once things turn around and improve, maybe after a little bit of time, a little bit of bearish time, new ideas might emerge, and so that will build the real fundamentals that we need. I mean, I'm not like expecting price to independently go somewhere. I want to see like strong foundation that will justify that price, right? So if Bitcoin goes to 1 million, it's going to be I think it's roughly speaking, like a 15 or 20x from now. So 20, $30 trillion asset. And it's going to need to be like need to have some serious contribution to the economy. So we should see a lot of transactions on Bitcoin, a lot of businesses build on it, a lot of even banks using that as the real asset. And so it's much better to track those fundamentals than to track like the final price. But I can see a world where this does happen. So let's see.
Let's see. We'll come back on another podcast, many hopefully along the way, but another podcast in 6 years and see what the world got in store for us then. Thank you so much, Sina, for being on the podcast. You mentioned before your Twitter and your newsletter. Are those the best places where people can find you?
Absolutely, yeah. I mean, my main analysis goes on Substack, Bitcoin Intelligence, and then I also have commentary on Twitter. Most of that commentary is either on my own research or sort of calling warning shots on bad takes. So if that's the kind of thing you like, follow me.
Always love some banter on Twitter. It's sometimes interesting and entertaining to watch. Thank you so much, Sina, for being on the podcast, and also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.